All right, welcome back for the episode of Carnivore Trade. Today's Friday, March 17th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So I'm doing this video a little early today. Obviously, it's almost 3 o'clock here. I have some obligations right after the bell. So trying to get this video out a little sooner than normal. Plus, it is Friday Opex. And right now, it does look like we are dipping a little bit here, but it does look like we're kind of pinned right now to probably about 3,900. You see there on the SPX. It's a major gamma level on the 0DTs and obviously a whole round number. We see that type of action every month for options X. And I don't really expect much consequence in either direction here. If we rally or if we fade, it doesn't really change the bigger picture at this point. The thing, or a couple of things that are in play in regards to Opex, and we kind of talked about this a little bit, the triple Qs specifically. So next week, obviously we have the FOMC, but a lot of these hedges are going to roll off here for March Opex. And what I mean by that is, I talked about this late last year. Then I said the NASDAQ would be the best performing index in January. That it's been extended out into really till now. And, I thought it was just going to be more of a January, maybe early February type thing, but it's really gotten extended out. And a lot of puts were bought at the lows because the NASDAQ got beaten up very badly in 2022. And, people said, I'm tired of getting beaten up. I got to buy put protection. So that was bought out to March. And a lot of those roll off. So what does this mean? It means the invisible hand that's been bidding up the Q. We just had a banking crisis, a few days ago. And the Qs are higher than where they were last Monday. Not this past Monday, the Monday before that. Remember, this was the big pivot here where we saw the Russell tank. And I said, guys, look, the Russell's telling us something. This market wants to go down. But now the triple Qs are ahead of that. They're above that pivot. And yesterday, again, I said, I didn't see a whole lot of upside here for today. We did pull back a little bit off the highs. And really, all it is a pullback at this point. If this consolidates, this can go higher, believe it or not. Even though it is extended, like some of these names here, like Microsoft, this is a little overdone here. Pretty good tail candle there on the daily too, going into a lot of resistance, but big move. Some of these names are overdone. Google, same thing here. I think Tesla's coming into some resistance as well. Actually, Tesla negative today. Apple is the only one that I think is really still kind of a strong name here. But either way, big picture. These hedges are rolling off, and I'm very interested to see what happens next week without that kind of invisible hand kind of guiding the Qs up to try and make those puts worthless. So right now, market's holding up. Granted, the Qs are holding up, I'll say, but the spiders here, even today, getting a little bit of a bounce again. There you go. So again, I said just a minute ago, I don't expect this to really have much more downside or consequence here. That they'll probably pin us right to 3,900, so we might bid up and then we'll come back in, but this looks like a pin job for the most part. So, but either way, the spiders here back below the 200, so we're going to close the week below the 200 again, barring a revelation here in the last hour, which I guess you can't rule it out. Especially in this market, they could say some nonsense about First Republic Bank again, and they could rip it up. The point is, though, it's not of much consequence in terms of the big picture, right? We have FOMC next week, and I think we're coming into another risk period here as well. So we talked about that really in mid-late February. We talked about that a week ago. I said this would probably be a bull trap. It is. I think we're getting into another risk period here early to mid next week. Now the Fed right now, everybody's focused on that. And by the way, the spiders have faded all of yesterday's rally, by the way. So we're basically flat to where we were Wednesday. So interesting price action there. But the Fed right now, again, like I keep saying, they want the market lower. They don't want to crash, though. But right now, they probably will have to do 25 basis points. And I would assume they're probably going to have to do something about this bond yield here. Well, I should say not the yield. This is the yield here. But I think they want that. They don't like that coming back down like that. So I would think that Jerome Powell is going to say something of that type of nature here to try and back the market off right now. But bottom line is they don't like seeing this the Qs do this. So again, we'll see what we get next week. If we, again, like I keep saying, if we trade up into that, it's more likely that we're going to have the opposite effect here. And I think the market can do that. But for right now, just an inside day here to close out Opex week. We'll see how we trade Monday, Tuesday, and Wednesday. All right, let's get over to the Russell here. We already talked about that a little bit. Down 2.5% on the day. Not a great pattern here. Again, a big down move and then just kind of chopping. Now it is very, there's lots of volatility here at the bottom. So this probably could get a counter trend rally if we get some type of positive news. Maybe this could go back up and test the 200. But when you get a lot of volatility after a good sell-off like that, usually it is the market trying to find a bottom of some sort. I mean, there is a lot of support in this area. So this is probably trying to put in some type of a short-term kind of low. And if we do see a rotation, if we do see more selling, again, like I just kind of hinted at, I would think the Russell and the Dow specifically would be the ones that hold up again. And you'd see the S&P and the Qs specifically start to roll over, and you kind of see like a roll reversal there. So something to watch for next week again. But nice move here for the Qs. Russell, it's trying to hang in there. The Dow, obviously, we just mentioned that's hanging in there as well. But, we've hammered on this trend line quite a bit here. So if this comes up and puts in a lower high, it can get through that. And I do believe it will. Eventually, it's just a matter of time here. By the way, no supports were built, again, on this whole run up except for, this area around 305, 307. So not the greatest, technically sound run up there. Definitely more of a squeeze. Of the squeeze variety there, but Dow's hanging in there for now, so we'll just leave it at that. All right, let's get over here to the semis. So semis still holding up. Let's look at everybody's favorite stock, Nvidia. So we got up to that 618 yesterday, and we had a gap up today. Risk reward. If you want to take a shot at this, I wouldn't have a problem with it because you pierce the 618. You got a rising wedge. Let's get rid of that 618 so we can see the chart better. But, we pierced the 618, we got the rising wedge, and we know lots of the time you get that upper trend line pierce on a rising wedge. It usually means the blow off top is occurring. So, maybe it can dance around here for a few more days, but I think this is poised for a sell the news at some point, whether that's the FOMC, whether that's something else, but very extended here, rising wedge. Risk reward, I think you're in a really good position here if you want to take a shot on the short side. I don't have a position in it. I have a broad, like a blanket semiconductor short, full disclosure, but I don't have one in Nvidia. But this is not a bad area here at all. AMD also kind of printing a similar candle. 1, 2, 3, 4 days up in a row. Big move yesterday, and then kind of just went right up into this pivot here around 97.60 and kind of a tail candle. Not a great tail, but it is a doji nonetheless. But anyway, semiconductors are holding up. We got that pierce of 250, and now we're pulling back. So we'll see what they do next week. But I don't see a ton more upside here in the SMH or really tech in general, to be honest. Except for perhaps Apple. But anyways, IGV, again, still struggling with this trend line. 1, 2, 3, 4 hits. And is basically above that right now. We'll respect it, but it's not, when you have a breakout candle like that, you want to see follow through the next day, and we're not quite seeing that. But, for right now, IGV is holding up. We'll give it the benefit of the doubt. If this consolidates, then it can go higher. If not, then I do think it is topped out for now. Dow Transport's DJT, so we have a failure here on our hands. Again, barring an absolute miracle, it's got to rally about 500 points here in the next hour, and I don't think that's going to happen. So that's a failed inside bar there on the transports. Transports are a leading indicator. Be careful here. That's not a good sign. And the financials are obviously falling out. Everybody knows that. But transport's flashing a warning sign here. So anytime you lose a green bar like that, especially, this is a 14,100 to 15,000, 1,700 point candle. That's a huge candle, right? And we're going to close the week below that. That's a huge, huge, huge negative. So big problems here. We had a chance to rally up today. We basically back tested that level, and that's coming in, and you're going to close back below the 200 on the weekly, on the daily 200 on a weekly basis. So not a good look here for DJT. Also losing the 50-week and 20-week moving average. So not great things here. Definitely don't want to see the transports selling off, especially going into an FOMC meeting. So anyways, we mentioned rates a little bit. Here's the ZT. Again, that is pushing up a little bit here. Yield curve starting to come a little bit in here, but the 3-month and 10-year is still inverted by, I think, 100 plus basis points. Let me double check. Yeah, 109 basis points. So that 3-month 10-year is still not really showing any sort of signs of reversing here, but bonds still getting a bid. We'll see what the Fed does next week. I think they talk that long end down, though. All right, over to housing. So via the XHB. XHB still under pressure. So down 1 3/4 here. And again, down move, kind of a rollover, down move, kind of a bear flaggish type pattern, down and then slightly up, down, and now sideways. So this continues sideways. It's going to put in a base to get through that 100 MA and eventually through this major support level here. If this support level goes, we're going all the way down to 59. So XHB in a little trouble here, definitely putting in that sideways consolidation. You're seeing the same thing there on the ITB. This is building up here, building a big bear base on that daily chart. Blow off top. I told you this was the top. This was probably a blow off move. We got a nice little initial distribution, and now this looks like more distribution, just kind of building that setup there for a push lower. So ITB home builders definitely on the weaker side. VNQ continuing to be weak. Again, another bearish inside bar there. That is not a pattern of strength anyway you slice or dice it. So housing, again, we talked about this earlier this year. They defied gravity, but these names are going to come in, and they're going to come in pretty sharply this year. All right, XLF. Again, down 3% of the day. I do think this is trying to carve out a near-term bottom here. Even looking at the KRE and the KBE, they do seem to be stabilizing a little bit. Again, we're not, I wouldn't be looking for a ton of upside here, but very oversold. And I think a lot of, again, in regards to Opex, I think a lot of these hedges, at least short-term hedges that may have been put on, will roll off, and you could get a rally here in financials. So again, right now the risk I think is in the tech sector near term, and believe it or not, like I hate to say you'd want to put money in banks, but like I think near term they would act a little bit more as a risk off, if that makes sense, or like a traditional risk off, which is what banks typically do if they can stabilize here. If we get more failures news over the weekend, that might change, but I think they've gotten pretty far out in front of this that it's not likely to happen. We've seen buyers step in on a lot of these regionals, and they're, JP Morgan is now going to capitalize, and Morgan Stanley's going to capitalize some of them. So we'll see. In the near term, I do think they get a bit. Now, I'm not saying they're going to have a huge amount of upside to 34, back to the 200. It could happen. But I could see them at least stabilizing, maybe back to this pivot here on the XLF. So, 33 and change. Definitely can't rule it out. Anyways, broker dealers here, XBD, again, inside pattern there. If this consolidates further, this can go lower. But again, if you do get a bounce, 470 is going to be your area there on that daily time frame. Over to crude futures here. So shifting over to energy. So crude, again, just kind of stuck in this little pattern here. I'd love to see a little bit of a retrace, but this has now failed on the weekly. So you had that green bar, you had a chance to reverse and go higher, but you're ultimately inside of this red bar the entire time. That's an inside bar, bear flag, down move, right? Down move, and then sideways. So nice breakdown there. And again, this is why I said I don't like that 200 moving average. I said, I told my members, I told you guys, don't buy this. If you're aggressive, you can play it for a quick bounce, but that's it, because that's all it's going to be. You've consolidated for 4 months above this 200. It's got juice to push through that. So I wouldn't touch anything till 60 and possibly even 50 here at this point. In fact, I do expect it to go to 50 at this point, but near term, if you can get a retrace, this is shortable. So I'm looking for that myself. But for right now, that is a breakdown there on the weekly time frame of crude futures. XLE holding up a little bit better, down just 1.52%. Got a nice bounce off that trend line. I'm not in love with it here. Could it hold up? Yeah, but I want to see a V shape, and today it's kind of just backing off. Maybe it's Opex related. In fact, a lot of this move probably is Opex related, right? Like a lot of calls. What sector has been working for the last however many months, right? Energy. And what sector hasn't worked? Tech. So all year long, you're kind of seeing energy put in lower highs, right? So you're seeing like call decay versus put decay that we're seeing in tech. Maybe that's being held down. Maybe energy will get a bid next week. I can't rule that out. This trend line should be support at least one more time. I just don't know how much of a bounce we're going to get here. Ultimately, I do think it does break and we do head lower for a little bit steeper of a correction, but the energy trade's not over with. We just need to more backing and filling on the bigger time frames. There's the XOP again, a little bit of a softer bounce. I don't like the pattern as much as XLE on this one. OIH also making a slight, looks like a slight lower low there. Or just barely saved the lows by the end of the day. Either way, a little bit of weakness there, down about 3.5 here. This probably wants to go test 250, but it might get a little bit of a bounce before then. But either way, nice fall there for OIH. Nat gas finally filling my gap there. So we did satisfy some downside targets here today on nat gas, and they finally filled that gap. We also hit the 618 from the low to this high here, right around 236, 237. That finally got hit. So we'll see, again, it's Opex. I don't expect it to bounce here today. It's an Opex Friday. It's not going to reverse on a Friday typically unless you get like major news. But I do think early next week this puts in that higher low and this starts to move higher. But yeah, nat gas finally filling that downside target. And I thought so. I was a little bit suspicious on Monday of this little bounce. I said I would have felt a lot better if we had gotten down to here and then bounced, but sometimes the math just wants to win out. Anyways, over the DXY. So DXY trying to hang in there here. And it does look like we're going to lose. Yeah, so we're going to lose a weekly pattern. Yeah, they pushed it below here. Yeah, so we're below that green bar there on the weekly pattern. So that's definitely a negative here for the DXY. They just pushed that through by the close there, it looks like on my screen. Yep, right by the Forex close there. So dollar index showing a little bit of weakness. We did hold the 50 moving average on the weekly, but that is a negative there on the week, losing that green bar. So we'll see what it does next week. Again, though, I'm not convinced I think the Fed comes out and talks down the long end. So that would be bullish DXY. Outside of that, again, we'll continue to watch that, but that is a failure. So, maybe a little bit of a positive here for dollar bears here in the short term. Again, we'll see what they do with that Fed meeting. Gold here continuing to surge, just a huge power move. Look at the GLD intraday. Man, big surge there. And that is through the level we talked about. Now, again, this is more of a monthly level. So I'm watching it really by the end of the month. So 1962, as you guys are aware. But a big power move there for gold. Let's look on the monthly time frame, actually. Yeah, big reversal. We'll have to watch and see where this closes. There on the weekly, we're going to close above that pivot too. So gold's holding up here. There's still some fear out there in the market. And you see ZB here, again, that long end of the curve coming back down a bit. That is helping out gold, obviously, as well as it being a fear trade. But that is a power move there into the close on gold futures. So interesting. We'll watch that, especially going into the Fed meeting. Silver also powering up here as well. Nice bid there. That probably wants 23. I'm not sure if we can get much through that. Maybe 23.50. We'll call it 23.50 because that's a pretty good power move. And again, like I told you, if this goes up and pulls back, this can go higher, and it has done that. So again, 23.50 or so is the level there on silver. Platinum also a nice bid here, but still a lower high. Again, it's a little bit sloppier of a pattern. I'm not as much in love with this right now. I wouldn't do anything with it at the moment. And then copper, definitely the weaker of the four. And again, if this starts to go sideways, it's going to set up a bear base, 2,375, as you guys are aware. Anyways, let's get over here to Bitcoin. So Bitcoin continuing. One second. There we go. Sorry about that. So Bitcoin continuing to push higher, and it's basically up into that trend line. So we'll watch that going into next week. Again, nice power move here off the lows, and you got these higher highs, and there's a broadening pattern. We didn't quite get to that trend line just yet. It's might be a little bit of room for error there, but it does look like it wants to go up and test this area. So we'll be watching for that next week. And again, the FOMC, if this trades up into the FOMC, it's going to be very interesting, especially if you get to that level. I'd have to assume there'd be a inverse reaction, but Bitcoin, hey, what can you say? Big power move. And again, we got to watch those weekly patterns. Like I said last week, notice how at the last minute, Like there was probably about, I remember doing the video at about 5 o'clock, 4 or 5 o'clock on Sunday, and the Bitcoin closes at 8. And when I did the video, Bitcoin was down here. And just before the last minute, before we opened, they pounded it right back up above that green bar. So they saved that inside bar, and guess what? We got a huge bid here on Bitcoin, so we will respect that for now. It does look like it wants to maybe go up and pierce this trend line, and again, hit that 28 to 28.5 area there on Bitcoin. Anyways, all right, let's get back over to the spiders here. Yeah, again, so we're just kind of stuck sideways. Notice how they had that really big bid, and now we're just kind of, we backed off a little bit. We'll probably stay range bound right near that 3,900 area here into the bell. About 45 minutes left. Again, big picture, lots of premium rolling off on both sides of the market here. Again, the Qs being the focal point. I would take a look at energy, also financials as well. There's definitely going to be some hedges, short-term hedges that went on because of those banks. It'll be interesting to see if those roll off. Also, the Russell may start to outperform a little bit more. So just a couple of things to watch for going into next week. And then, of course, the FOMC. If we're up big into that, I would be a little bit nervous as a bull because the Fed, they don't want the market to rally here. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all next week.